Okay, breakaway gaps, very, very, very important. And what happens when there's a breakaway gap is it's going to bring in a lot of new traders, and add volume. That's one way you can tell if it's an uncommon or important type gap. You're going to see volume rise. It's going to bring in new traders, and it's usually driven off some type of big event or some news thing, something that's happening that's really driving the impact on that security and really impacting. And there's a gap. It could be up or down, but there's a big gap that's coming. And it frequently marks the start of a new trend. When you have a breakaway gap, and I'll show you this visually what those look like in a moment here, but when you have that, it can mark the start of a new trend. There's a major change coming. There's a major change in your chart that you'll see. You might see that the daily trading range, the high-low starts to widen. You might see an increase in in-day volatility with lots of things being sold high and low all throughout the day. And also, we mentioned the much higher trading volume are good indicators that a breakaway gap is occurring. And what happens is it's actually going to break through support and resistance levels, can help confirm a significant breakaway gap. So, support level would be like low prices and resistance would be high prices, and somehow it's breaking through something, breaking through some, this trading range of prices, and that's why we call it a breakaway gap. And it is a significant leap in terms of the price, and we'll take a look at that now and how to trade on that here visually. So in this example, we have an upward gap, right? We have a gap between days 4 and days 5 prices. And what you're really looking for is a couple things. Ideally for a breakaway gap, you want it to be really proportionally big in terms of the trading range. So for example, if the normal range is, let's say, $3 or whatever your currency is, and the gap is $15 as far as between the preceding day's high and low, and the gap day then opens up higher than that might show you that something significant is going on. There's a big gap in between the prices, and the more significant the gap, the more impactful that is, and more likely you might have a true breakaway gap. Again, we have to wait till the end of the day to really confirm that it's a gap, that it doesn't come down in price like in this example and just overlap, and then we don't have a gap at all. Well, if we look at this, we have this proportionally big in terms of the trading range. There's a big jump up in terms of what was going on before, between days 4 and 5, and you can see in the preceding days kind of confirm that as well. And then also, to really identify a breakaway gap, it occurs when price is only slightly trending or moving sideways. There's not much going on, and then boom, it happens. It's not like there's some big massive trend and you have a little breakaway gap, but it's already part of a massive trend. That's not a true breakaway gap. That's something else actually we're going to learn that's going on. But if you look at, like here in this example, you can see where prices are at day 1, they're in 2, 3, and 4, they're up, they're down, there's no significant trend, or it's kind of moving sideways, and then there's a big leap up. If anything, you might have said, well, between days 2 and 4, there might have been a little bit of a downtrend, and then all of a sudden, boom, there's a big gap upwards. To day 5, something had caused that. So when you're looking at an interpretation of these, let's look at this one here. This is an example of an upside gap, as we know. So if there's something happens, some good news, creates demand, and people want the stock badly, or the security badly, and they're willing to pay higher prices to get it. Volume noticeably is typically noticeably higher than usual. If we were to put volume along the bottom of this, and we look at some other charts later, you'll see that. But if we had volume here, you'd usually see a spike or a dramatic increase in volume, because there's some news overnight, some good news, everybody's like, oh, this looks like a good security, I want to get in here, and a lot of people are getting in now, and they're willing to pay these higher prices right from the start of the day. And that's what helped create this big upside gap. The other way of looking at a breakaway gap, of course, is a downside gap. And what that means is that current security holders, they want to get out of it. They want to dump this security and sell it, and they're even willing to accept even lower prices to do that. They're willing to go even lower than whatever was the low of the range the previous day. They just want out. And volume, again, is usually, but not always, but usually abnormally high in this case as well. Again, there's some kind of event, something's happening, and there's a mass movement either up or down. In this case, this would be a downside breakaway gap where there's been a significant kind of move here to sell the security. So either way, you're looking for these gaps, and you're looking for these significant moves for a breakaway gap, as opposed to other gaps we're going to learn about.